Hello, everyone. TGIF, Mark, Kevin. Everyone doing okay? S&P's failed to make a new high. How are you, Brock? So we got very close to a new high, but we didn't do it. Just want to kind of review the week, and how you could tell that you might be onto something is just as simple as not getting run over. Okay, so here was the turnaround Tuesday short, 20 handles. Here was the Wednesday short, 50 handles. And then I sold some near the close yesterday. 61.8 was 82 and 78.6 was 90, and it's failing. So even the 61.8 at 82 is up 20 handles here. So why does that tell me, that something's changing? Is because I've sold rallies and gotten run over. Okay. So when you're selling things, even though it hasn't turned into a shift in trend, or you don't know if you have a turning point yet, just the fact that you're not getting killed while trying it is a pretty good sign that you're onto something. Okay. So 3 sales, all working. S&Ps are barely higher on the week. NASDAQ made a new high without the S&Ps. Here's its new high. It's diverging up here. And on a weekly basis, let's see if we're still higher on the week in the S&Ps. That too. Or an argument for taking profits when you have them on part of your position. I think that's an even better argument. Low leverage is always good, but learning how to bank part of your trade instead of watching it evaporate and just riding the roller coaster up and down. You could do that with part of your position, but I'm a big proponent of you got to take something. You have 10 to 20 handles on an S&P trade. You take part of that and then tighten your stop. That's right. So you're not perfect. Okay. You leave money on the table by taking partials, but a lot of times you're not leaving money on the table. You're grateful you took something off. So to me, that's the only way to kind of overcome trying to be perfect, all in, all out. Okay, so let's see if we're still higher on the week. Barely higher on the week. Looks like we're on change. No, we're lower on the week. Last week's close was 3,367. To have a 2-week reversal, I know I brought it up a few times. We're not that far away now. 2-week reversal happens at 3,351.5. We close under that today, and you're going to have a 2-week reversal. Everyone with me on it? So really, the Bradley date worked on the 19th, as well as all the divergences I talked about. Yeah, early in the week on multiple time frames. You guys remember that? I went over daily, 4-hour, 2-hour, 1-hour, even 15-minute, and across all time frames, new highs were not confirming. Okay, and I have to give the comeback kid of the week is the US dollar. Okay, so we went from breaking the double bottom at 92.50, trading almost down to 92. Blake put out a great chart of the day that this may have been a false breakout. Once we did this, back above 92.50, we just had a little pullback, and here we go. So I actually think this rally in the dollar has legs to about 95 to 96, and most likely that's not going to help risk. Here's a negative week in euro. Nice trade, Blake, on the short side, but here's your weekly. Pretty ugly candle, almost a reversal. We need 117.86. We've got it, so we're going to have a 2-week reversal in euro USD. The comeback kid is $1, and we're actually getting a nice reversal candle here. God, if we could take out 94, that's going to be a real nice outside candle. That's still 60 pips away. Canada pulled back yesterday. Canada's trying to put in a reversal week. It hasn't yet. Just to go, well, reversal week's way up here. So the dollar's acting better than Canada. Look at the two candles. Here's the Dixie, and here's Canada. But Canada does look like it has a shot. Crude down 4. So I hope that our analysis here in FACE has helped you guys, even if you're not a subscriber. How many people did we help this week? Give me a why. Even if you're not a subscriber. Carlos, nice to meet you. Nikita, you still haven't joined. I'm bouncing you out of the room. You shouldn't have been so honest. Yeah, you're really cheap. Does your wife say that? Or girlfriend? So I'm doing a little Don Rickles here. Anyway, I think that's mainly, and don't take this for granted. Another great chart of the day by Blake is, thanks for the reporting. Euro pound looks like it's breaking down. And I think on the chart of the day yesterday, really nice look. I mean, why can't we go, to 87 or so? And I think Greg is going to be with us. I think he has targets all the way down here. So any questions for me? There's the end. Okay, Laura, glad to help. Rates, remember at the beginning of the week, I said people are going to say, oh, that was just a little blip on rates, and that there'd be some doubt about it now. And actually, you look at the week, maybe they're right. But when I look at this, Brock, shorter term TFs, this looks pretty directional or impulsive. And right now, look how oversold we are. I don't think that the 10-year, I don't think that the 10-year is going to take out this low. To me, it looks like it's consolidating before another wave. So, I still think there's a chance. It's contrarian view of us trading up here towards, 110, 120. I think we'll know next week. If we get a decent sell-off in risk, that's going to be interesting. Yeah, that's what the argument is, that there'll be no vaccine, which is negative for rates, that they'll stay lower longer because we can't have a recovery without a vaccine. So that's what I'm hearing too, Charles. Okay, so turn it over to Blaker here. And Steve will be back with us next week, even though he's still working on his vacation. Right, Blake, if you and I were able to take a vacation, do you think
it's funny. All I heard from Steve today is complaining about being on vacation.
Yeah.
I gotta sit here and got to work on my computer on vacation. It's like, man, whatever.
Huh?
I'm so irritated. I'm like, yeah, okay. I haven't been on vacation since October of last year. I mean, granted, it was a great vacation, but man, it's been a long time. So, I don't
Hey, I
want
went to the hospital overnight.
Hey, good job. Good job.
That
That's
was a,
that's a change of pace, right?
the medication put me on vacation for a little while.
There you go.
Anyway, so nice Euro trade, brother.
Huh? Oh,
Nice
thanks.
Euro trade.
Yeah, I cut it a little early. I just closed it out, but it's been in all actuality, it's been a pretty choppy week. I've got some pretty good ideas brewing right now. Some pretty big potential moves that are brewing, but where it all. I'm going to tell you where it all happens, and this is what's really going to move the market. Is this? Here's the S&P, and I'm gonna just show you really quickly what's going to move the market here.
Yeah, breaking that trend line.
It's either above 3,400 or below 3,350.
Yeah,
3,350, and we're 3,360 right now. So I mean, we're basically coming towards the lower end of the trend line, because if we break through 3,350, we should revisit 3,300, maybe 3,250, right? That's like possible. If we break above 3,400, we're going to obviously squeeze. So this is going to create, either one of these two moves here is going to create volatility for the FX market. So I think we need to have, be on a little heads up. Now I usually don't go through cross rates here. And by the way, I don't know if we have Grega or Andre, or no, Paul stopping in today, but
I think Grega.
He's going to step in today. He said it yesterday. Maybe he's going to come.
Yeah, it might be, Grega might be coming back, but I just wanted to bring that up just because I don't normally go through cross rates, but I want to bring this cross rate to you. I want to bring it to your
yen cross.
It is a yen cross. Do you know which one?
I know you.
Sterling.
Tomorrow. Huh?
No, I could give a crap less about the guppy right now. Get another try.
Aussie yen.
Yeah, actually the Aussie yen. And let me show you something really quick with the Aussie yen. Now, obviously, if you do, if you are a ForexAnalytix subscriber, you're already kind of keen to this. But I've been watching this chart for a long time, and this has been a really important chart of mine to keep an eye on risk, right? Yesterday, if you dismiss yesterday, well, actually, I'll just take you over to yesterday's chart. You can actually see it right here. And here's the daily chart. This is yesterday's chart, obviously not today. But look at yesterday's chart. We were probing that uptrend line, right? RSI was breaking down. And the end of day analysis, the Aussie yen closed above the 76 yen level and trend line, but the RSI is trying to break lower from the triangle, which should be monitored by the bears. Because the reason why I mentioned that, and it's something that I think I actually talked about it on the daily roundup yesterday. I have to go back and listen again because I can't remember right at this moment, is because RSI, sometimes in situations like this, I've seen it lead price. So when RSI was starting to break down, I'm like, man, this Aussie yen looks like it's going to roll over. And, for that reason, I continue to hold on to dollar Canadian longs, some dollar Mexican peso longs, because, and I'm short some Kiwi yen, just because I'm not a believer that equity markets are going to break higher when you're seeing things like this. Now, I look at the Aussie yen and I think of like kind of a longer term setup of the Aussie yen. What does that look like to you there, Stelios or Coach? Could develop?
Well, you mean if it breaks or what?
Well, I want you to be a little creative with your mind. I'm gonna show you what I'm thinking here.
Oh, inverse head and shoulders.
Yep. So I'm thinking that we're gonna do that, right? I'm overall I'm an Aussie bull, and you know there's a reason why. First of all, I think that inflation at some point, I know people have been yammering about it forever. I think at some point, I think this is actually the point. Inflation is going to start to increase in the coming years. Um, the massive amount of liquidity we've not only seen since, you know, the great financial crisis, but COVID, I think it's going to come home to roost. I think we're going to see higher inflationary prices, whether you're talking about hard assets, real estate, gold, cars, watches. I don't care. You know, I think inflation's it's actually going to be real over the next couple of years, and I think it's going to feed into these commodity currencies. However, near term, I actually think the Aussie could be impacted a little bit. You know, especially with risk appetite. Something else that I'm watching too is that the big dam in China. I know we talked a little bit about it a couple of months ago, but it's something else that I think that we need to pay attention to, because the dam is like it could literally wipe out millions of people and their homes in China, and you got to keep an eye on it, because I think it's going to have a negative effect on Chinese growth, but more from a currency standpoint, it might actually impact Aussie negatively at first if a tragedy like that happens. And I think, you know, because of all the rains and the flooding that's happening, we've got to keep an eye on it. And if that happens, the Aussie will come down, but then it should strengthen after that pretty aggressively, because China is going to require a lot of Australia's resources for rebuilding after the, you know, tragedy is kind of past. So I'm watching the Aussie for a lot of different reasons. I do think it's and that I actually think is a pretty big risk appetite in China in general. What is the name of that dam? The Three Gorge Dam, I think, is what it is, if I'm not mistaken.
I don't remember.
You can just Google Chinese dam break, flood, you know, whatever. But the point I'm trying to make here is see the relative strength on Aussie yen. It's leading us lower, like price is going to eventually break, and I wouldn't be surprised if the Aussie yen, you know, trades down towards the 200-day moving average, you know, find some support before eventually breaking out, something like that, maybe even further, you know, depending on what happens with risk. I mean, you know, obviously if the S&P goes from 33, where we at 3360 and drops to, you know, 2800, you know, the Aussie yen probably is not going to the 200-day moving average, it's probably going to like 70. You know what I mean? So it really is more dependent on what equities are doing and everything else, not just, you know, me trying to figure, you know, trying to forecast where we're going here. You know, it's near impossible to do right now without seeing what's happening at that time. But it does look vulnerable, and that's one of the things that's keeping me on the defensive with regarding currencies. Now, what I have to pull up today, let me pull up the bias chart.
By the way, it is the Three Gorges Dam. Thank you, Sam.
Okay, Three Gorges Dam. That's what I thought it was. I wasn't 100% sure, but I was pretty sure. All right, so you know, Stelios, I'm going to start. We have Canadian retail sales this morning, right?
That is correct. And then
Okay,
some US data a lot later.
Okay, so what I'm going to do really quick is I'm going to do the Canadian, get that out of the way. One of the things I want to point out about the Canadian is yesterday we broke this downtrend line, and you'll notice what we did is we came back and retested it. You see that? The black trend line here? broken trend line, came back, retested it, and now here we are back near the 38% retracement. Now you'll notice I already drew this because I sent it out to our traders earlier this morning when we were down at 132. I think we're developing an inverted head and shoulder pattern, which is complex. Now, this is the interesting thing, because if the dollar Canadian actually breaks out, then now we're going to threaten the channel resistance. But why is that big? Because that channel resistance isn't just any normal channel resistance. That's actually multi-month channel resistance, which what I'm trying to point out here to you is 132.75 is a big deal to me. And the dollar Canadian looks vulnerable to a break higher. Now, what's really going to perpetuate like a move like this higher is going to be the S&P breaking lower, and but that's really what I'm looking at. And I have a little bit of dollar Canadian exposure. Believe me, I want to have a lot more on, a big breakout. Okay, so it's something that I think we all should be monitoring. So resistance today is 132.40, then 132.75, and that is key. And as you guys know, I've been keeping us on range because I'm just it's been divergent, unlike the Aussie and the Kiwi and the Euro and everything else that's been moving. It's just the dollar Canadian's been kind of very sluggish to moving lower. And you notice we're all multi-year trend lines right here. That's why I have a pattern in play in the dollar Canadian. So support right now is obviously, well, we can write down the overnight low, which is 131.60, but really it's 131.30. So 131.30 is key support. That's 161% extension, and then 1.3160. Okay, range. Let me get through some analysis really quick. So the euro failed breakout attempt. I did ForexAnalytix. We had a pattern in play from the dark cloud covered it this morning, but it's gone lower since then. We are currently, trading around this pretty key level of support here. You can see it here, but what we did is we just traded it down to the 78% retracement. Now, false breakouts usually lead to complete breakdowns, so I'm not convinced that the euro's done going lower. But that doesn't mean, that doesn't mean it can't bounce. I think any bounce back, above 118 is going to find some sellers. So the 78% retracement, sorry, my eyes are watering right now, is 117.65. So the low here is 60. I'm going to write down, the 88% retracement comes in at, well, I have to write down a couple numbers. 117.10, obviously, and then 117.60. I know we're on it, but I have to write it down. Any rally back to probably that previous support here, 118.25. Should find sellers today. 118.25. Now, I'm going to write down bullish. You guys know, because you guys have heard me say this for the last couple of weeks. I know it's a bullish trend, but just because it's a bullish trend doesn't mean we can't have counter trend moves. If you guys have been watching me here every day for the last couple of weeks, I am expecting this. I'm expecting, maybe is not the right word. I'm hoping for that. I'm hoping, because I really just want to get long the euro down here. It's really what I want to happen. Trading at counter trend is risky. When it's in such a bullish trend, if you're short, you just have to take smaller positions because, simply it's just it's easier for it to go higher than it is to go lower. So And we saw that a perfect example of that yesterday. I mean, we were selling off yesterday morning, then yesterday afternoon we bounced like a bat out of hell, not in just the euro, but in everything. So, you know, that's typical when you're going counter trend. It's going to happen. Yesterday was bananas, right? Yeah. Speaking of bananas, I mean, look at the cable. Okay. I mean, look at this move. I mean, we were rallying above 132.50. We slipped all the way down to 130.50. Yesterday we rallied 150 pips higher back to 132.50 and then back down again today. I mean, and remember, a lot of this is European PMIs, and just I have to mention to you guys, the European PMI data was not good at all. The UK PMIs I don't think were that bad, right, Stelios? I'm not sure if
they were actually good. And
yeah,
retail sales was a lot better as well.
Which is crazy, because now you got the cable
Well,
sliding.
This is why we rallied, and then we had the news out of the Barnier and the Brexit stuff, which was negative, and we're selling it.
Okay, so what was that news, by the way?
Well, basically, Barnier said that they're not close to an agreement, and the main disagreeing point is fishing waters and other stuff. The same old, basically. So there's no progress. That's the problem.
And we were warned about that yesterday, and there was actually news yesterday that was the risk that we're risking Brexit with no deal still.
Yeah.
And there's a lot of reporting on that yesterday. So
for me, this whole thing is like a divorce, like a messy divorce. Both sides want this, I want that, I do this, I do that. In the end, they're going to agree on something. Is it going to be good or crappy or whatever? It doesn't matter. So my opinion remains that they're going to find some kind of agreement. It might not be a good one for one side or for both sides, but I think we're going to avoid a messy Brexit. That's my view.
Got it.
I could be wrong, obviously.
Well, with the cable, I'm going to put the cable back in range. And the reason why I'm doing that is because, these failed breakout attempts above the 132 level really have to be, that is, I think, a big warning for cable bulls. And I know I can't really turn bearish, but at the same time, it's really hard for me to be bullish when we keep failing above this multi-year trend line, above this horizontal resistance here. So I'm very nervous about cable longs. All right, let's go over to the Aussie. So the Aussie, just so you guys know, and I've spent a lot of time in recent years making fun of City Tech. Man, City Tech, they're great. They've been great. If they issue an alert, you just basically go opposite, and then you're fine. But they've actually been quite on recently, and myself and a couple of my colleagues in the New York area, we've been observing that recently. They actually even made it was just crazy. They had a short recommendation in the Aussie, a tactical short, like literally right like at 72 cents, and then they closed it at 71.30 or 71.40 yesterday. Like within a few hours, I'm like, wow, even Citi is scalping, which is odd. And the reason why I bring this up is because when you have banks that are issuing alerts like that so quickly, what that suggests to me is that if things are extremely choppy and volatile, typically banks won't do things like that.
Day trades, yeah.
They don't. They don't. And so when you're
Blake, if I could just ask Stella a question.
Well, yeah, go ahead. But the data's I forgot the data.
Oh yeah, go ahead.
Stelios doesn't. He's sleeping at the wheel. So
it's not even 30 seconds before yet. So that's
all right.
Okay, Stella. Well, if you could tell me which country is the husband in Brexit and which one's the wife, I'll tell you who's going to get the better deal.
Well, I'm going to tell you, he's going to tell you going to tell you the wife is Europe.
Europe,
because he's gone through a divorce before, right?
I have, yeah.
Just kidding.
Everyone should do it once.
Where's
pro tip: don't get married in the UK. There you go.
Okay.
Or
wait, did I just miss it? No, that's Mexican retail sales.
California.
Right, right here. Month over month, we're expecting Well, they're expecting 18%. Bloomberg says 24.5. Wow.
Yeah.
Core 10.6, 15.7.
23.7, and core slightly better. Core slightly better. Retail
Core is
sales
slightly
slightly
better.
worse. So
Okay.
nothing overall.
And actually, did you see that I think Data Flash came out quicker than Bloomberg, by the
I
way.
think it was
did.
very close. Yes.
Yeah.
In
All right.
one.
Well, okay. Well, dang it. I was hoping for some excitement, but it looks like I'm going to have to pass on the excitement. Okay. So let me get through the analysis really quick, guys. So just bear with me for about 10 minutes. Let's go over to the Aussie. All right. So the reason why I was telling you that story about Citi is because I think things are extremely volatile, and that's good because I do think that we're close to breaking out. As I explained to you guys about the S&P, the S&P I think we're 50 points. We're in a 50-point range that's going to determine the type of volatility we're going to see in the coming days. So I think that's big. It's something that we need to watch. Okay, so with the Aussie, what's really important about the Aussie and where we're at right now, here's the daily chart. I'm zooming all the way out here. So you can see this trend line that comes in all the way from 2013 to today. It's 7-year trend line, right? When we broke it, originally Aussie screamed higher, but what we're doing is we're just kind of channeling above it. So what that means is a break below the 71.30 level is going to be important. What's more important is that dotted line, which is 70.75. So, and you guys have heard me say this like every day. So but you're not the only new. We do have new listeners that pop in daily, so it's not
Multitudes.
I have to okay, so Greg is going to come in today, which is cool, guys. You're going to get an updated look. I'm going to ask him specifically about the S&P. So just you guys can hold your questions. I'm going to ask Greg about I'm going to show him what I see, and then we're going to go from there. All right. Aussie high overnight. We should note it now. And let me get rid of this fib. We don't need that right now. So the high overnight is 72.15. I'm sure people that are long right now really wish that we could get back to 72 cents just to get out of whatever they own. Since we're bouncing around in this channel, I'm going to keep it on neutral for now, okay? Because I'm starting to worry about these commodity type of currencies, whether you're talking about the Canadian, whether you're talking about the Aussie, whether you're talking about the Kiwi. They're not performing very well. And that is starting to concern me a little bit. Okay, here's the Kiwi. Same type of thing. And you guys know that we are sitting on a multi-year trend line. Again, yesterday, we had a little bit of a false breakdown below the 65.30, but we wrote down 65 cents as being support. Yes, we did dip to 65. What was the low there? 64.88 before bouncing. I mean, I'm telling you guys that this is make it or break it for the Kiwi right there. And I'm going to write down this as being pretty important support here. And I'm going to keep it on range. And you'll notice that the Kiwis, I mean, it may be holding off the bears at the moment, but it's not trading bullishly. It's actually quite heavy, right? So just be mindful of it. I mean, this Kiwi, we start breaking down and it's going to get ugly. All right, I think resistance right now, intraday, 65.70, not great resistance, but it'll be, that should contain any rally that we see. Swissy, still bearish, but I'm giving you the buts because we had this false breakdown. But see this trend line? That capped the rally yesterday. That trend line comes in at 91.50. So I'm going to write this down. 91.50 And then you guys know the next level that I'm going to write down, right? Because you guys have known it for the last 3 weeks. Okay, 92.40. It's bearish while we're below that 92.40. However, the false breakdown still, you know, it's got me thinking that, you know, that we might still see a reversal. 90.50 is still support. And you notice yesterday we went all the way back down to 90.60. We're still respecting this right here. Buyers come in ahead of it. Pretty typical of strong support, you know. People come in, they want to be buying. US dollar, Norwegian krone, I'm just doing it because it's here. Look at where we're at. We get above 9, and we're and this is another. So you guys, you know, you hear me talk about, I'm a little worried about the commodity currencies, the Kiwi, the Aussie, the Canadian, the Norwegian krona. This is the thing's already giving us, it's already starting to suggest that that we're turning here. You know, you start getting all these commodity currencies working in unison in one direction, and next thing you know, it puts together a big reversal, right? So 881, you guys already know it, right? 9. We're bearish for now, but we're probing. We're literally probing this trend line. We break it, we should probably trade back to 920. And that's actually a pretty big move for Norway. And just so you guys know, if it you know starts to build some momentum. Dollar yen, messy as all get out. Hard to trade the dollar yen right now. I mean, you know, look at this chart. You guys go ahead and, you know, have fun with that. 105.30, 106.50, same stuff. Okay. Up 50. It's range. Dollar index bearish, but for how long? Right. False breakdown. Yesterday was a little bit of a cluster fabrication. You thought I was going to say it, didn't you? You did. Okay. So support 92.50, resistance 94. Obviously, is, you know, same stuff. But this, you know what, intraday. $93.40. Okay. So 93.40, 94. That's key, which is keeping us bearish. 92.50. Dollar max, same as yesterday. I'm going to write it down. You guys should know it by heart now, right? I don't even have to pull up the chart. 22.02, 22.25. However, I'm going to pull up the chart because yesterday we rallied past 22.25, and we squeezed. That was basically a squeeze. But you can see here, just right here. Here's 25, right? Previous support still acted as current resistance. We just overshot. You know, this is just this right here. That was just an overshoot, right? But what that tells me actually is we should probably adjust that number just a little higher to this number, which comes in at 22.30. So that's going to be the number we're going to write down now. Because realistically, if we break above 22.30 again, we should go. We should rally back, and then, you know, if we rally back to 22.60, this would be the next resistance, right? 22.60, which comes through here. And then, you know, if we rally past that, then we're talking 22.90. And if we get past 22.90, then we got a double bottom, which actually points to 23.50. So, you know, lots of resistance overhead, but a lot of things, a lot of work to do if you're bullish, but I think the setup is there. You know, I think the setup is developing. Let me delete all this stuff. Let's go 4 hour. And I'm still bullish the dollar Mexican peso because we're just diverging. It's not the dollar, the Mexican peso is not hitting new highs against the dollar, you know, unlike other, you know, that we're seeing it in other places. So I still think the dollar Mexican peso is at risk of a rally. Okay. Okay. So where are we at? Okay, gold and the S&P. So let's start at the S&P because it's right here. So you guys should know this. Actually, today's low comes in at 33.60. So I'm going to write down two levels, right? Because the trend line, well, first of all, support is at 33.50. And this is key because this is yesterday's low. Trend line support is at 33.60. That's today's low, all right? And we bounced off it like a bat out of hell. So you can see, just, you know, look. Today's trend line. Oh, today's trend line. Boom, you know, just a nice launch off of it. So that means that if we break through this support here, things are going to get probably bearish. I don't know if I doubt we're going to do it today. Let me just put it that way. I doubt we're going to break down today, but stranger things have happened on a Friday. Okay. Resistance is still at 34. And it's bullish. Gold. Trendline support. This might be the catalyst that drives S&P lower, frankly, is if gold breaks down. You know, I try to figure out what you know could do, you know, what could actually move the market, like stocks. Gold's been following risk, or risk has been following gold quite a bit. So if we break through this 1900 level, you guys know that 1900 is our, right? That right now is key support. We are still bullish, and resistance is 2015. One last thing before Gregor comes on. Is Gregor here?
Yes, he is.
Hey, okay. So before you come on, I'm gonna ask you. First of all, I want to ask you about the S&P, because let me just show you what I see. The S&P we have, and this is I was telling everybody here, Gregor, that we have this uptrend line that we're respecting big time. We did yesterday. We did today. You can see it's a big, you know, that's already a 10-point bounce off of that trend line. So it's obviously very important. 3,400 is obviously very big resistance, you know. So, you know, we got 3,400 and basically 3050. And what I was saying is this, oops, shoot, I didn't want to move that fib level. Let me move that back. Okay. So what I was saying is basically, you know, resistance above 3,400 is big, or below 3050 is big, and you know, wherever the market goes, it's gonna that's gonna determine, you know, what's gonna happen, in my opinion. Now, I'd love to see your counts, but here's what I wanted to say, which is really important, guys. And I was talking to one of my colleagues about this yesterday. Do you know what's happening next week? Gregor and Stelios, Dale, you can blurt it out if you know. Do you know what's big events happening next week? Jackson Hole.
I was going to say Steve is coming back from holidays, but that's not it.
That's really not a big deal. Just kidding. No, it's and Greg, I'm going to pass over the charts to you right now. So I'm going to stop sharing. I'm going to let you take the charts, and you can show us what you are thinking on the S&P or whatever else you want to. So charts are yours now. But the reason why I want to talk about this is because Jackson Hole Symposium, what the Jerome Powell's topic of conversation is talking about monetary policy and reviewing the Fed. And basically what they're going to be talking about is the framework of the Fed. And the market expects that the Fed is going to let inflation run hot. That means they're going to keep rates low for probably 2, 3, 4, 5, 10, 30, 40 years. Who knows? But realistically, we're talking 2 years and longer. That is the expectation, that we're going to get that signal from the Fed next week on the 27th. So next Thursday. If the Fed does not deliver, that they're going to allow the economy to run, inflation run hot and the economy run hot, then that could be what really turns the dollar actually bullish from here. So next week, I believe, is a very big week, not only for stocks, but for the dollar as well. And so I think it's going to be the inflection point that we're all looking for. Anyway, because if the Fed says we're going to basically keep rates low for the next 2, 3, 4 years, and the market starts to believe that, and we're going to let the economy run hot, we're going to let inflation run hot. If that's what Jerome Powell says, gold's going to rip to 2,400 and stocks are going to hit 3,600 on the S&P. Okay, I said my piece. Grega, what do you see on the S&P here?
Well, actually, I'm observing two ideas. The first was because of this sharp drop that we have seen this week. I thought that maybe wave 5 is already in place, but since we rallied quite significantly, I agree with you. I mean, for now, the S&P 500 is definitely still bullish, and this could be, from an Elliott wave perspective, actually a triangle on the way up. So I think that today's closing price action will be very important. If we can hold those levels from yesterday, those lows, then I really think that we may see another push to the upside here on the S&P 500. And maybe that will be actually a final push up, since triangles occur prior to the final move within a higher degree of the cycle that I'm tracking up here from start of August. So I'm looking for this cycle to be accomplished, and you said yourself, maybe the next week will be a decision when we will see something more significant on the way down.
Gregor, just going in line with what I was saying, well, maybe the Fed, does signal to the market that we, they're going to let the, inflation run hot and the economy run hot, which I that's what the market is expecting. And so maybe that will complete that wave 5 move that you're, pointing out.
Yeah, I mean, it's definitely a very strong bull market still, but this bull market needs a correction. I mean, we need some kind of a pause. September is also very important when a lot of liquidity is coming back. So I think that this could definitely impact the price action. I mean, if we were bullish through the summer, then we could slow down through in September and October. On the other hand, whenever we were, let's say, sideways through summer, then we were expecting a breakout in September, October. So now could be the opposite. I think that we could be slowing down and maybe turn significantly lower, or at least for a higher degree correction that I'm expecting.
Also, Greg, if we break that trend line and the triangle formation, what
lower
would you be looking for? Well, I know lower. I'm wondering about levels.
Like let's say this week was the peak at 3,400. Let's just say what Dale is saying here. Where would we go from here?
I would have to see a daily close below this. Was what?
33.20.
Below this spike support here. If I see a daily close below that level, then I think that we go lower, and would probably looking for retracement all the way back to this wave B consolidation that was acting through July.
Got it. Okay. Yeah. All right. So before making a determination, you need to actually see it happen first.
Yeah, of course. I mean, it's still an uptrend, right? So until it's invalidated, why to fight it? But looking at NASDAQ 100, a very strong market here, as you know, technology sector is very strong. But when I see very strong market like this, now in a fifth wave, then I really think that other markets could potentially see, if this market slows down, could potentially see a very big drop. I mean, if you look at bank stocks, you will see that they were very, very bearish in the last few weeks, and I would not be surprised by even lower price action on those. So I'm watching what will Nasdaq 100 do up here. I think that if this one really comes down here from these fips, as you can see, I'm looking for an extended wave 3 here in the middle, and now wave 5 can be equal to wave 1, which is usually the case when wave 3 is extended, can be equal around 11,760, around there. And there we also have 38.2% projection of wave 3, which is also target for a wave 5. And at the same time, if you look back here at the wave 3 high, let's say that someone expected to see a top right there of wave 5. Well, at that time, there was no divergence, a real divergence here on the RSI, because RSI was at the top. But now, when we are expecting wave 5, normally we would see a divergence, and the RSI is lower. So I think that this is also quite important, at least for me, indication that we could be in a fifth wave here slowing down.
All right. Well, hey, Grega, I'm going to let you continue on. I want to thank you very much for being here today, and giving your insights to us about, you know, all these different markets. I'm gonna bow
Sure,
out.
my
But
pleasure. Have a good weekend.
Yeah, you do the same. I just want to say to everybody that's listening in, you know, you guys are listening to Grega Horvat. He not only does Elliott wave analysis for himself and his personal clients, but he's also part of the ForexAnalytix team. So if you are looking at the Elliott wave analysis on ForexAnalytix, you're getting Grega Horvat's analysis. And remember to try out ForexAnalytix. It's only $1 for 10 days. So if you want to see Grega's work as it's happening, check this out. All right, Grega, thank you. Dale, Stelios, TGIF, thank you guys. I'll see the rest of you all in the chat room. Thank you, and have fun, Grega, and appreciate your analysis here today.
Have a great weekend, Blake. Are you doing anything special this weekend?
Yeah, I'm gonna go from the love seat to the couch. See you guys later.
People ask me that question. I go, how ridiculous. What do you have planned this weekend?
See you later. Bye-bye.
All right, buddy. So, Grega, what do you think of this dollar comeback this week? Is it significant? I know that earlier in the week, you know, you had kind of a bullish take on euro that maybe okay, so there's your update of it. So we're getting this correction now in the euro.
Yeah.
Okay.
I mean, we have seen here move out of a triangle, and as you know, back then I think that we were close to this trend line, and now it was broken, even retested from the other side, and we are selling off. So I think you have a lot of indications actually that this is an impulsive reversal from the highs, and that we will see much deeper pullback. Now the question is, what is this? It's a significant top, it's just a pullback. Well, I'm still observing two ideas. Now the first one is that we have seen this extended wave C, and that we are still bearish on the longer term charts on the euro, or that we are actually moving just for a pullback into wave 4. And I really love this second interpretation still, because it's the wave count that tracks the price action. The price itself, it's still bullish. So from a trading perspective, I think that this one is much more important and interesting. But I would be definitely looking for this one if we see something dramatically to the downside next week. So overall, I think that dollar, I mean, a lot of pairs are showing that dollar could be turning up. If we take a look on Aussie here, we are turning down from the highs after this triangle here, and we came down impulsively. Also, last time I showed this copper chart, we said that we are in a wave 5 and could be slowing down, and looks like that we are now having this bearish indication that wave 5 has ended. So watch out for a new setback. At least in the short term, we could see a retest of this trend line. And in the meantime, definitely that's not positive for Aussie. In fact, I would be looking for Aussie to see even lower prices. Even yesterday, when stocks bounced quite significantly, Aussie did not follow much to the upside. So I think that's just another reason why we could be looking for potential weakness. I mean, even pound, which has been quite strong quite strong, is now reversing these previous gains. So it really tells you that bulls are having some hard times here.
Yeah, the dollar's pretty bid across the board, pretty well bid.
Yes, I mean, and if we close the week like this, I really think that we could be in here for a much deeper correction here on euro and other majors.
Okay, thank you, buddy.
Yeah, I mean, and also let me just check the following. I need to stop screen sharing just a second. Okay, do you see Bitcoin charts?
Yeah.
Okay, perfect.
They're small now. There it is. Bitcoin.
Yeah. Actually, what I wanted to show is this. Still, if you remember this chart.
Oh, yeah.
The 21 bull cycle on the S&P 500. I mean, we are now 20 weeks in 21st week of recovery. So we are actually in very late stages of this uptrend compared to the previous cycles, which were actually the same. So I think that this Nasdaq 100 is really, which is the strongest sector, is really telling us that we could be here, or at least we should be careful here at new all-time highs, because always after 21 weeks of recovery, market slowed down at the new all-time highs. It didn't slow down at the lower swing high, but at the new high. Okay, each time in the last 2 or 3 years. So now we maybe could be facing the same situation here. Also, the 10-year US yields are still looking bearish. I see a potential triangle now. If this one is really headed lower, then I think that there could be a real risk of situation.
Okay.
Also, if there are any interest in Bitcoin, I think that this price action is quite important at the moment. What we see is actually an extended move out of this triangle in consolidation. I have been repeating this a lot of times, actually, that we are in such case in a final structure within a larger pattern. Ideally, that's a wave 5, so we should be aware of a reversal or deeper pullback. And the intraday price structure is very important here. You have, on a 1 hour time frame, you have these 5 waves of decline. And whenever you see a 5-wave structure, either that's from the low or from the highs, you really should be aware that this is an impulse, this is a strong reversal that indicates where the trend is. Even if it's a smaller degree of trend, it tells you where we could move forward after a pullback. So what I'm looking at here, actually, if I update you a little bit, is 5 waves down, now tracking a corrective rally. I think that the important resistance is around 12,000 up here. It's also quite nice psychological level as well. So if anyone is interested in cryptocurrencies, we also cover those on ForexAnalytix as well. So watch out for potential deeper pullbacks. If you own them on the long term, I think that this anyhow should not be a big deal if you see a correction.
Thank you, buddy.
Thank you.
Is that it?
Yeah, or if we have any questions.
All right, let's do this. It's Friday, everyone's loyal. First question for Grega, we'll take it and that'll wrap it. Go ahead. Silver. Silver was first.
Silver, okay.
From Nikita.
Okay, so actually I can first look at gold. I mean, what is really important here is I have obviously a lot of clients who knows how to count the Elliott waves. And there were a lot of them who counted this drop in 3 waves, which is not wrong, okay? Because actually you do not have any clear 4th wave here within this sell-off. But in such cases, when you see such a sharp drop, I go to the daily chart, okay? and I will now hide labelings. And if I say to you now, try to label this wave structure, you will definitely label this as a wave A.
Okay.
Okay, then wave B, and then you would be expecting a sell-off in wave C. So despite having a potential free wave drop on the 4-hour chart, I think that the most important is what is going on the higher time frame charts. Now, the higher is the time frame, more reliable and important is the price structure. So in my opinion, this sharp sell-off indicated that we are in the first leg of a deeper corrective pullback. So I'm still expecting a little bit lower prices here on metals. Even a retest of August lows, I think, are very, very possible. And if we go back to the 30-minute chart, in fact, you had only 3 waves of recovery, and you can clearly count 5 waves down here from that swing high here. So I think that there is a chance that that gold will go even lower after a bounce. Correction could maybe stop around 1975. Okay, so I'm watching for lower prices on metals. Now, if we take a look quickly on silver, silver is not that bearish, okay, but still, I think it's in a complex correction because we have seen a 3-wave recovery here. So another question is if maybe that will be some kind of a triangle, maybe a flat or whatever, but we have to realize that wave 4 is not always a simple ABC structure, can be something much more complex. We know different patterns, can be triangle, can be WXY, can be a double zigzag. So it's really important to wait a little bit here for price action.
You know what people are going to be saying, Greg, if we get down to your level, that green, that uptrend, that big channel that it accelerated above and it pulls back to it, they're going to be saying that July was a left shoulder and August is a head and this failing rally is a right shoulder, and that's going to be the neckline.
So neckline around 2340.
Yeah.
Yeah, I mean, and such
it's probably not the right interpretation, but you know, that's the way it's going to look down there.
Yeah, I mean, I really love head and shoulders patterns, and I love to look for reversals when I spot them. But I really love them when I see wave 5 top,
okay,
and then head and shoulders formation, because that would be indicating a completely new change in trend. But in such case, when I have wave 3, and I know it's a wave 4, and I see head and shoulders formation, I'm very, very careful.
So we get a false breakdown because it's not the right count. And people get bearish and it goes to your 21 or 22 level.
Yes, and then we
blow.
Yeah, and I mean, it's a very strong trend here.
Yeah. Oh my God. I know I got run over.
So
wow, it was great to have you a couple times in 1 week. I think it's a record.
Yeah. So I will take Steve's seats now.
Steve's on a working vacation, if you notice on Skype.
But he's listening everywhere.
He'll be back, and Greg, always great to have you. You know, I hope you and your family remain untouched and your kids are safe going back to school and all of that, buddy.
Yeah, at least everyone were worried here about school if we will start normally or no, but looks like it's going to be normal, at least now.
Yeah. All right. Well, thanks again, Wizard.
Thank you.
Appreciate you stepping up this week for Steve and everyone out there. Have a great weekend. You're welcome, Brock, Amira, and remember, and I know Grega does this, don't just count your pips, count your blessings. I know what your blessings are, Grega, and I know you know too. So everyone have a great weekend, and we'll be back to lay it all on the court for you again next week. Consider joining. Over the weekend's a good time to familiarize yourself with our site, and so that you're not overwhelmed when trading begins next week. So thank you again, everyone. Enjoy. You're very welcome, everyone. You're welcome, Laura, Monica, all my groupies, and my roadies, Hugo and Skip. The tour resumes on Monday. Adios.